Lucid Motors has been one of the most talked about electric vehicle companies in recent weeks. Before their global reveal of the Lucid Air in September 2020, they were almost unheard of. But ever since, they have been dubbed a Tesla killer. And even more recently, EV investor enthusiasts have jumped on board with the prospects of Lucid Motors going public through a SPAC merger with Churchill Capital CCIV. So aside from quick short-term gains, why are so many people interested in Lucid with no new news about a merger? In today's video, we'll be going over what makes Lucid Motors unique in the EV market, how this and recent weeks' events play into Lucid's long-term potential, and what this means for you as an investor. Let's get started. Hello everyone, this is Chris with MC Stocks. Remember to subscribe and hit the like button for more videos like this one. And as always, please remember to do your own due diligence when investing and seek a financial advisor for professional advice. Lucid Motors publicized their luxury electric vehicle sedan, the Lucid Air, in their global reveal event back in 2020. During this presentation, we learned just how strong of a competitor Lucid can be in the EV market space and why so many investors are interested in this company. Let's take a look at the specs of this car. Right off their homepage, we can see some of the key stats. The Lucid Air has a maximum range of 517 miles, currently more than the maximum range of any Tesla. The Air also has a starting price of about $70,000, a direct competitor to the Tesla Model S, which has a starting price of $69,420. And lastly, they boast a 1080 horsepower maximum for the Lucid Air. So all very impressive details up front, making a clear case to why they should be stiff competition to Tesla. But let's dive in deeper. In their Explore Lucid Air page, the first very unique feature stands out. They advertise that you can charge 300 miles of the Lucid Air battery in just 20 minutes. This is a remarkable technological achievement for Lucid. This feature delivers great convenience to drivers and raises the possibilities for the entire EV market. For comparison, you would need to go to a Tesla supercharging station to get comparative charging rates for your Tesla, and you would need to swap out your entire battery at a battery swapping station with a Neo EV. But with this feature built into the Lucid Air, you can charge up in minutes right at home. Furthermore, one of the most unique features of the Lucid Air is the bidirectionality of the battery. Not only can the car receive energy to charge up its battery, but it can also send energy back out. This means that with a Lucid Air, your car could also function as a backup battery to your house in the event of a power outage. This also means that because the Lucid Air can send power in and out, you can charge up your Lucid Air from another Lucid Air. So with all of these great unique features, it's no wonder why this car may be considered a Tesla killer. But are there buyers for this luxury car? Let's check out this recent interview with Lucid CEO Peter Rawlinson. Here he gives some clues about Lucid's sales and what we can expect from the upcoming deliveries. Let's listen in on the interview.
You are going to start rather small, of course. I think it's annual capacity, the first phase of 34,000 units. You expect to produce 6,000 to 7,000 units this year. Is that correct?
We've already built our first phase of our factory in Arizona, which is good for 34,000 units. But that site ultimately will be capable of producing 400,000 cars a year.
How many other people are reserving their various Lucid Airs right now? And can you give me a sense of the demand each day?
Well, it's overwhelming, Jim, and I'm really glad you have impeccable taste, sir. We have a bulging order book. It's growing daily.
The key takeaway here is that Lucid will eventually reach their goal of producing 34,000 vehicles annually with their new Arizona factory and 400,000 later on. But for this first year, that number is around the 6,000 to 7,000 range. And with Peter's comments saying that the current demand is overwhelming, shows that they need to boost productivity in order to scale accordingly. This means that Lucid does have a long way to go to catch up to a company like Tesla. So we will need to hear news about rapid growth in sales, production, and deliveries to really see this company take off. This first batch of luxury car sales should be raking in high amounts of profits due to the good margins being made. Ideally, this will be enough for them to accelerate their production goals, continue developing vehicles for the broader market, and pursue their other ventures like selling their batteries. Now let's shift over to Churchill Capital CCIV. CCIV stock has gained a considerable amount of attention over the past few weeks due to growing rumors that they will merge with Lucid Motors to take them public. And since this would be a combination of a SPAC and an EV company, the hype for a potential merger announcement is significant. But this does pose significant risk for the stock in both the short term and even the long term. Let's see why. The short term reasoning is fairly obvious. The stock price is very volatile at the moment, swinging up on any new evidence revealed pointing towards a merger, and the stock price plummets on any news that casts some doubt. Plus, if the merger doesn't occur, a skydive of the stock price may be expected. Now, due to the clear volatility in the stock, CCIV makes for great short-term trading opportunities. However, this is not entirely good news for the long term, around a 1-year time range if the companies do actually merge. With all of the hype and attention around a merger announcement, confirmation can shoot CCIV stock up even further than today's prices. However, the higher it goes, the more likely people will cash out to take profits. And without the understanding of Lucid's technological uniqueness and their current state of sales and delivery expectations, it may be really difficult for Lucid to recover from the early sell-off after a merger announcement. This could mean that Lucid will fall victim to the buy the hype, sell the news trend that we have seen throughout 2020. It's entirely possible for Lucid to recover from a sell-off, but to convince long-term investors looking beyond a few years' time frame, news about increased sales and a ramp-up in production and delivery rates will need to be enticing. But at this moment, many are clearly interested in the trading activity and the possibility of investing early into Lucid. If you're looking to buy shares of CCIV and need a brokerage, be sure to use our referral links for M1 Finance in the description below. M1 Finance is doing a great offer currently where you can get a free $30 using our referral link. So use the link below, earn an easy $30, and don't miss out. Good luck everyone with your holdings, and stay tuned on our channel for any news regarding upcoming Lucid Motors and CCIV developments. Thank you for watching today's video. Don't forget to subscribe and hit the notification bell to get notified when we release our next video. Please like and share for more videos similar to this one, and comment below with any questions that you may have so that we can address them in future videos. Thanks.